All right, here we go. It's 8 o'clock. Let's go.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Happy Friday. Spencer Israel, Joel Elconin, Dennis Dick is here, but he's in a fast market getting his kids ready for school. So when the kids get off to school, Dennis will be back with us. I promise. We got to talk about Bitcoin today. That'll be the story of the day. The kids are off to school. They're on the bus, and Dennis is here. Dennis, welcome. Thanks for joining us. So we're going to talk Bitcoin. We're going to talk Nike. We're going to talk Costco. We're going to talk some M&A. We're going to talk all of that with JC Parets at 8:35. He is from AllStarCharts. We've been trying to get JC on this show for like a month. We've had to reschedule. He had to go do a wine harvest. He's back. So we'll get JC and JC's technical thoughts on in a half hour from now. Before I throw it to Joel, quick PSA. Next Tuesday, right? Yes, the 28th, Tuesday, Joel will be live with Gene Munster and a mystery guest, 1 to 1:30, premarketprep.com. Here's a code for you all. Ready? I'm going to give you a code to access the debate. The code is PMP Mystery 28. I'll put it on the screen, okay? I'll literally spell it out for you. PMP Mystery 28. That code will get you in on Tuesday. 1 to 1:30, Joel with Gene and a mystery guest debating technology stocks. Okay, let's get to the charts, though, Joel. How are we doing this morning?
Under pressure. Little David Bowie song here.
Yeah, it's a song.
Yeah, a little rally off, last night, tricked Dennis going into that 8 o'clock close.
Oh, yeah, they tricked me again.
They floated up. They couldn't take out the high. They missed the high from yesterday by 4.5 handles, and then I'm not sure if we got China or they didn't like the Nike earnings, but just kind of rolled over. And now we're down 22 handles at 44.16. We're just right in the area of last Friday's close. I was talking about that yesterday, and we exceeded it by 25 handles. But now we're back under it. So important day for the market to see if we can at least end up green on the week. Crude spending some time over $73. New high for the move today, but it's down 22 cents at 73.08. Gold got shellacked yesterday. New low for the move, trying to rebound up $1.20, 17.51. Silver in the red by 14 cents at 22.53. Bitcoin under pressure, heading towards that 40K low, two of those lows at 40K, down $3,600, 41,340. And Ethereum, that's moving in sympathy. That's down 11%, $355 at 28.14.
Yeah. So but let's start with the overall market here. Dennis, I'd be curious to get your thoughts on the fact that we filled Friday's gap and then some, actually.
We've had a good rally.
Yeah.
I mean, if you're coming in buying it now, I said it yesterday, I thought you were doing it backwards, and we tacked on more. So again, though, I think you're buying dips now too. So I'm always doing the same thing. We're in this chop and slop market. You got to buy the dips and sell the rips. Yesterday's rip to be sold, I guess, obviously early yesterday, but you're getting a dip here this morning. So you got your shopping list and you go out and you do some shopping. The other stock that I bought, I forgot, was Jemiah. So I bought JMIA 3 days ago, around $19, went to 20, dipping back here today. So just looking at putting some more risk on, just allocating around. I don't think Evergrande is the event that's going to make us go into a bear market. I don't think we're going down 20%. We had a little 5% correction in the SPY, and they can't stop buying them. So you know what? I think you're going to win your bet, Spencer. I think we're going to be making new highs by the end of the year. But I'm using the dips to buy. Today you get a little dip. Maybe you do a little shopping.
Just indecision. I just think, you had that the dip last Friday, the dip last Monday, Tuesday we were still lower, but it kind of felt like an up day. The Wednesday rip and then Thursday rip, and now I don't know. I kind of feel like we're just maybe going to find some kind of trading range, and it's going to be below the old time high. And I don't know, maybe just above the 4,300 level. Maybe not even take out that low and just grind for a while until we decide what to do. But, we got through the Fed meeting and definitely 2-day rally, got back more than half the move. Just what's the catalyst? There's, we keep getting submarine by China in certain sectors. Uh, Certain tech sectors are under, part of, Facebook's under pressure. So that's it. I'm looking for more of a trading range than more of a rip higher, rip lower.
Okay.
I think, well, that's what we've been saying. You're saying the exact same thing that we've been saying. It's buy the dip, sell the rip. We're in a trading range. There is, really, you look at IWM for the last year, and it's a better indicator for the overall market. It's just range bound. And you know what? We just went from the bottom of the range 4 days ago, around 214, up to 225. So I think now it gets tougher. So I do think we're going to make new highs by the end of the year, but it's not going to be easy sailing. And it's not like a bold call here at this point in time.
Yeah.
I mean, we're 2% off the highs. So, 2.5% here on SPY. So it's not a bold call at all to say we can make new highs. Are we going to go break out and have a 25% rally from here? Well, nobody knows anything, but I think we just do more of the same. I think, you keep just trading, because if you're putting stocks in and saying, yeah, this stock's going way up, take the gains when you got them, because you know what? It's just the market will take them away from you if you don't take them, because that's what I've learned in this environment here. It's not the environment that we're running 30, 40, 50% and everything's just going awesome. It's the environment where we're just chopping around and just moving around, oscillating. So fade trade wins in this environment.
Yeah, and that's basically what I said yesterday with Joel in the afternoon. Is like, we're not going to get. I don't think we're going to get all-time highs next week, but we're going to get all-time highs at some point.
I think so. Why not? Why not? Where is the money going to go? The Tina trade is probably the most important thing. Where are we going, Joel? Where are you putting money? You keep it in cash, and you're getting the shit kicked out of you by inflation.
I'm telling you. No. Hold on. I will tell you. We are all going to do the same thing today. Ready? Let's all come in and collectively buy the dip in crypto. How about that?
I might.
Okay.
I might. I'm not against it. China torpedoes something else again. I mean, China is just at war with capital markets right now, because they come in and they just torpedo a sector twice a week. What have they done now? Let's just go through the tail of the tape with China. Start from the beginning. How many stocks? They started with their own stocks, obviously. DD. And maybe to start with Alibaba.
Alibaba was first.
Alibaba at first.
Baba first. And look at Alibaba. Like, holy crap. I should have sold all that. I'm down in the stock now. I bought it 5 years ago. Watch them go to 150 to 300. It's back down to $147. So I'm actually down in it now. I sold half of it. Thank goodness. Wish I would have sold it all. It's the only pure Chinese stock that I own. It's about 1% of my portfolio, becoming less every day. And you know what? I wish I didn't own any. I wish I didn't own anything. Over
right. It was Alibaba, and then it was like Baidu. There, I feel like together, and
both of those stocks. So Alibaba is down 55% from the highs. Baidu is now, let's go to those highs, which were overdone, way overdone, but well over 50% from the highs as well. Significant sell-offs.
Right. So from there we've got DD. Yeah. Right.
If I'm torpedoed their Uber.
I'm going in order. It might not be going.
Yeah.
And actually, if you really want to start, you could even say, well, let's start with the travel industry with COVID, but let's not go there. So DD. Then you've got casinos, and no. Then
there's
video
more
games.
Stuff between them. What do you have?
Then video games.
Video games.
Right.
Yeah, you can't play video games; those are bad.
And casinos.
Then casinos.
But I should point out, if I say crypto today, we should point out that today is not the first time that China has come out negative on crypto. Actually,
I don't like crypto.
Nothing really has. I guess the only thing that's changed today is that the People's Bank of China actually said that crypto transactions need to be banned. They haven't been banned yet. They're just saying they need to be banned. But we knew this. We knew that China didn't like
Crypto goes against everything they're about. Control. I mean, this is taking control away. So crypto is right at the heart of, like, you can't control it. So of course they don't want they don't want their people transacting crypto. They want to be able to control. They want the control. So
thank you, Eddie Lee. We forgot education as well.
The education stocks absolutely hammered over there. Bring us a couple of those, like TAL.
Yeah.
TAL, look at this stock. You want to see a good investment? Laugh out loud. $90 in February. TAL was $90 in February. It's $4. It's $4. So I don't know. Down 90%. You think it's probably going to zero. So when they go that far, but I don't know. I can't touch them at this point in time. EDU, back in February, $20 a share. It's $1.93. They have just torpedoed so many sectors, man. So many sectors.
Yeah. What about
it's serious? And they don't come back. That's the one thing to consider too.
Well, there's one that
we haven't seen back. They shrug off the China. Baba never shrugged it off. Didi never shrugged it off. The video gamers really haven't shrugged it off. Casinos really haven't shrugged it off. Maybe crypto. We haven't seen a bounce. Like, that's one thing to consider. The sectors they're torpedoing, Joel, to use your words, they've never come back. They don't come back. So I don't know. Like, do you not buy the dip on stuff they're attacking?
Well, maybe, but can we really agree that crypto is a different beast than companies and
I would
stocks?
Think so.
Right?
I would hope so.
I would hope so too.
But what about, it's serious. I mean, we'd be easily at all-time highs if it wasn't for China. I mean, easily. We know that.
What about
it's the biggest risk out there because you don't know what they're going to do next.
Lucky Kitchen.
Yeah, we're lucky.
Well, that wasn't their fault, though. That was
actually. We've looked at that stock in the last couple of weeks, haven't we? It's LKC. No, what's the ticker? LNKCY.
That was just a scam, though. That wasn't the Chinese regulators' fault. It was just a scam.
I'll get it. It's OTC LKNCY, and it's actually not doing that bad. But anyway, yeah. So that's why crypto is down today. You've all seen that news by now, I'm sure. The futures, Bitcoin down 8%, Ethereum down 11%. As I said to Randy on the news desk, I guess we're buying more today. I guess that's the only thing we're gonna do.
I don't know. I might increase my crypto exposure. We'll see. But again, now I think about it. When China starts attacking something, it doesn't seem to bounce back right away. So maybe that makes me a little more hesitant.
It's like the third or fourth time this has happened now.
Making new lows here, Dennis. We're just kind of still a slow leak from yesterday. We had pressure on the close, and I'm not sure how they popped it up to that 51.50. What the heck time did they do that? I must have been sleeping. I know I was sleeping. What is?
Oh, you're always sleeping. Just kidding.
Yeah, let's see here. What time is it? Oh, just after midnight. Should have had the orders out there. But where are we going? We're going to the intraday low from yesterday, 01.25. So
yeah,
the battle for last Friday's close is still on, folks. We'll see.
We're a long ways from there, though.
No.
120 points above the low we set 4 days ago. So there's some air below. There's air above, but there's air below. So I think you got to pick your stock. You got to pick, what, and have your list. But just coming in and saying, okay, yes, buy, this is a dip I'm going to buy. You might be right, but there's, where do you stop yourself out? We go 335 too. I mean, we're still, for 435, we're still well above that low from about 4 days ago. So it was a hell of a rally. Yesterday was just it was overdone yesterday, and then or at the open, and then it kept running yesterday too. So the rally's way overdone. This dead cat bounce became, it got 2/3 of it back. So I think you're lightening up into the rips and you're buying the dips and just continue to do that until it doesn't work anymore. I know we sound like a broken record on this show, but you know what? It's been working, so we're going to continue to repeat what is working.
Let's move on. if you guys want, and we can go to Nike here because they reported earnings last night, and basically the theme of their report and the theme of the of the conference after with the analyst call was supply chain problems, and because of those supply chain problems, they did lower their sales guidance a little bit. Prior to yesterday, their sales guidance for the year had been low double-digit growth, low double-digit percent growth year over year. Now it's more like mid-single-digit percent growth year over year. This is for their sales for the year. So lowering their sales guidance, and what they said was just all kinds of supply chain problems. That was basically my takeaway. The numbers, I'll give you the numbers if you guys want them, even though guidance is more important than earnings. EPS came in 5 cents above the estimate. Sales came in a smidge below the estimate. Comps were up. Or I'm sorry, online sales were up 25% year over year, but it's all about that guidance lowering and supply chain problems and all sorts of stuff. They talked about Vietnam and factory closings and all kind of things. But anyway, sales guidance lowered for the year is the bottom line.
Are these going away anytime soon, these supply chain problems? I mean, some of this comes from China as well, does it not?
Oh, yes, for sure.
So, I mean, China's at war with the capital markets, and they probably are at war here. Like, I wonder if some of this isn't starting to be intentional somehow. Some of these supply chain problems. I know that's all over the place, and yes, demand is through the roof on a lot of different stuff, but it's everything. Like, you talk about Nike. I mean, I've got my next door neighbor doing, a renovation on their house, same time we're doing our build. They've been waiting on vanities for like 2 months. Like, they're ready to move in, but they have they're waiting for fixtures, they're waiting for their vanities, and it's like the stuff's on order and it just doesn't come in. It's the same thing with my Apple, iPhone that I just ordered. They're like, well, we're projecting it out 3 weeks. Well, they're like, but we don't really know. I mean, it's crazy to think we're in this environment where we can't get stuff. Like we never experienced this. Not very often in North America do we experience like, I want to buy something and there's just none of it to buy.
Why can't
It's
they
a new
unload those
experience for
ships?
us.
Why can't they unload? I mean, is it workers? There's no room. I mean, what's going on?
Yeah.
I mean, I know California's always screwing things up, but what?
throwing darts at California today.
Yeah,
Okay.
if California just broke off into the ocean, I mean, it would be like a big win for our country.
Okay.
Yeah.
Strike that from the record. I have no idea what Joe's talking about.
Yeah,
and I disagree with that statement.
Take Florida while you're at it.
Oh
But
no, I like Florida.
okay.
Florida.
No.
Nike's in trouble here. I mean, anyone that says that Nike's not in huge technical trouble here, then they don't know how to read charts. I mean, first of all, you had the gap and go off earnings, and then the street just said, I want out of this stock. I do not want to be long this stock going into earnings. And right, boom, the street was right. Now, what do you do if you get into this gap? 150.48. I mean, it's gonna fill the gap. It's good. I don't know the exact path to it, but that was a ridiculous gap. It held it. It tacked on another 35 points, and it's just gonna labor. So I don't think you try and pick a bottom anywhere between here and 135.
And the whole thing, to Dennis's question about the supply chain problems and when it gets sorted out, this actually reminds me a little bit of COVID last year, in that no one really had any clue as to when it was going to end or when it was going to get better. And it seems like we're just repeating the same thing, where we thought this could be a temporary problem on these supply chain problems, or they'll get sorted out by the end of the year. Don't worry. Well, Nike's saying not so fast. It's going to take a little while longer to get all these problems, and it stems from labor shortages. It's all connected, right? It's all economics. Everything is connected, right? Labor shortages here leads to delays there. You know what I mean? So
yeah,
sounds like what everyone is saying, if you just read the tea leaves, is like, forget 2021. This is going to be a 2022 problem as well.
It's gonna be a long problem. I mean, it is. As long as the food chain's not disrupted, I'll be okay, right?
There's certain stuff you can't get in the stores too, though. You go in the grocery store and there's some empty shelves on certain products too.
Yeah.
It's not even, there is food issues too. Like, not saying we can't get food, but there is some stuff that is not on the shelves. I mean, and again, like, we had issues even up here with suntan lotion this summer. I went in there and I was like, I went in a couple stores and it's completely empty. The spray suntan. They had I like the spray, But there was like, it was all empty shelves. I'm like, this is crazy.
Well, I'm sure now it's not empty.
Oh yeah, now well, not in summer anymore. Who the hell wants sunscreen? But you can always get the
Yeah,
stuff
now
when you don't
you-
want it.
No,
But you
now
coupled
it's the value.
increased demand. Anything that has increased demand right now, they're not able to meet, the supply is not able to meet it. So you jack up the demand just for seasonality too, like in sunscreen's case, and it's trouble meeting the demand. So it's an issue. It's an issue for sure for a lot of companies. And you just got to start looking through when you're looking and trying to predict these earnings reports and saying, hey, a company like Nike, I mean, some of them were predictable, like Campbell's. It's predictable they were going to be getting squeezed. There's certain companies that are getting squeezed. So, I mean, logic is winning in some of these cases. So, in the case of Nike, you're thinking about it. Yeah, I mean, supply chain issues here once again, stocks down. So,
supply. That's not boding well for inflation, right? Less supply, higher
well, it's
demand,
all
higher
connected
prices.
too. Like
Yeah.
Spencer's right with the labor shortage too. I mean, people don't want to work for $15 an hour. They don't want to do these jobs for 15, $20 an hour, and they shouldn't have to, because I mean, how do you, when prices are going up, and this is all stems back, some of we can say it's on China, but let's go back to the Fed. I mean, they're so scared to even taper. They've caused all these problems. You can say, oh, Powell's doing a good job. Is he really? Is he really? I mean, we've got, interest rates that have been so low forever. The entire economy is built on debt, including the U.S. government, where, we got to raise the debt ceiling every 6 months. It's inevitable. The hole is so deep, there's no way to ever get out of it. So they just keep hoping that they're just going to continue to dig the hole, because what else can you do? When you're literally stuck in this hole a mile up and you have no way of ever climbing out of it, you just dig it and hope you find a way out through the bottom. And that's what, all it comes back to is the Fed. It's been too easy. The money's been too easy. Now inflation is running rampant, and it is. The lies that they feed us that it's 2% is an absolute joke.
Wait. No one is saying
absolute joke.
No one is saying it's 2%. Okay.
Go to my Twitter feed. What do you mean no one is saying it's 2%? It's exactly what Powell said during his press conference. Go to my Twitter feed. I took a picture of his comment, which was an absolute joke. Go to my Twitter feed.
All right, I have it up.
Bring it up from I don't tweet that often, like 4 or 5 tweets ago, probably. Powell forecasts show very modest overshoots of 2% inflation goal. That's what he said. That's what he said. Right from the freaking press conference. Look at that. That's what he said from his mouth.
Okay.
That is a lie.
He
Folks,
got me there.
That is just lying. It might be on their crappy indexes because they put TVs and garbage in there, but they don't include housing, they don't include energy, they don't include food in any of those numbers. And that's the stuff where you're really spending money on. People are spending money on that stuff. The guy is just, if they honestly aren't lying, then they're just the stupidest people on the planet. Because you can go anywhere and 2% is a joke. We are not running at 2%. We're running at 8 to 10% on all of our important stuff. It's significant. And this is why it's hard to think that the stock market is going to turn around and crash, because where do you put your money? If I'm sitting in cash, I'm getting crushed right now. So at least when you're in stocks or even crypto, at least you're keeping up so far with inflation. As long as you're making 8-10% on your money a year, at least you're keeping your purchasing power. But if you're sitting in cash and cash is giving you, like the TLT, going to go in the 20-year bond, sit for 1.46%. Yes, the bonds can continue to rise and you can get that extra return. But really, you're buying 20-year bond at 1.46%. I got to think eventually this bond market just epically collapses.
Oh, whoa. Okay. That
I got to think
that was a leap there at the end.
Yeah. I'm going and just saying eventually, if you're jumping in and throwing all your money in a bond in a 20-year at 1.46%, eventually you're going to lose some money. Okay. And it's worked because the yields have gone lower and we're saying negative yields, and the bonds have went up in price because of that. But you're not keeping up with inflation. I think eventually you don't want any of that stuff. I don't know where else you go. That's why I think it comes back to the equity markets. Why I'm not bearish stocks.
Okay, if I can bring it back to Nike for a second, one of the reasons I like the Nike earnings is because there's always mad sympathy plays to go off Nike, right? You can go Under Armour, you can go Foot Locker, you can go Skechers.
There's good ones.
Yeah, there are more. I only gave 3 there.
Foot Locker's your pure play. Obviously, they sell a lot of Nike shoes. So Nike supply issues, it's like, that's not good for Foot Locker. So, so you go to Foot Locker, and that's obviously going to spill over into that. Lululemon is another one that does
How is
trade off
Lululemon?
Sympathy with it. But Foot Locker has been, a little more in the gutter than Nike for a while here. We've topped out back in May. We are now 64 down to 50. You're talking 15 points on 65, 25% off the highs. So it is a pullback. Am I jumping in Foot Locker, though, when there's supply issues coming on from one of their major shoe producers? It's tough. So I don't know where, the trend is ugly, too. I think we're going to bring JC on. We know JC don't like downtrends. This Foot Locker clearly in a downtrend here right now.
What about this Lululemon here? If you want to, if you're worried about this, look at that. Just perched up and gapped up at all-time highs and holding. Bill Big D, I don't know if your girlfriend sold her stock yet, but man, oh man. I mean, here you are, new all-time highs, hanging out, down 291 Sympathy. But we had, Under Armour really doesn't go anywhere. What's that? What's the more liquid one? UA?
They're both very liquid. I pair these up. They're both. It's a nice, and obviously we talk share class arbitrage. I talked in our last webinar that we did on an educational event. We'll talk a little bit more about it in October and at our next educational event. They're both very liquid. UAA are nice to trade against each other. Obviously, the two stocks track each other perfectly. I mean, this is a stock that has been in the gutter for years. It's trying to show some light, but if you got supply chain issues going through Nike, you probably got supply chain issues going to hit Under Armour too eventually. So this is, a stock where, could it be potentially that they say something? When does UA report? Do they report coming up, or did they already?
They're already out.
They're already out, so we won't hear about them for 2.5 months then. But maybe those issues.
I wouldn't go that far, but Under Armour reported on the August 3rd. They reported, so
they got another. You got another month.
Yeah.
Is there supply issues going to happen to these types of companies too? Possibly. So I don't want to come in here and obviously you've got supply issues. We know what they torpedo the stocks. It's not even sometimes the company's fault. They've got demand for the products and they can't get it. I mean, Ford, GM, that was the biggest issue for them too. The chips shortage. So is that their fault? Not really, but they torpedoed the stocks for it. Yep. So I probably out on UA for now as well.
Mitch is pointing out Dick's as well, which is also a sympathy play here. And it's trading down off this number. So
remember, Dick's does so many more things than just shoes.
But it's the same. It's the same thing. It's the same problem. So, I mean, why else?
A lot of things to think about.
Yeah.
Yeah. Especially, one thing that really bothers me is, and I still can't figure it out, on the Michigan football jersey.
Yeah.
Somehow he's going to bring it to Michigan.
They have Jordan on there. Doing his basketball thing. I mean, well, what? I don't understand that. He was anti-Detroit. It's basketball.
This might be the worst tangent we've ever went on.
Look at Michigan's jersey. It's very disheartening to see Michael.
These are the things that Joel thinks about at night. When Joel can't sleep, he's thinking.
I don't understand it.
He thinks about Michigan sports, though. How many times a day are you thinking about Michigan sports?
Not as much as I used to. I'm missing another home game. I've only gone to one home game so far.
There's only been 2. Okay, no, there's been 3. Okay,
there's been 3.
Okay, fine.
I'm going to be 1 for 4.
Okay, let's stick with the earnings theme and move on to Costco here. Numbers out of Costco. It's sort of the same story, right? It's trying to understand the impacts of inflation and supply chain. But the takeaway for Costco, their earnings were good. Their sales were good. Revenue up 17% year over year. That was a bit above estimates. Comms, we already got comms we get them for at the beginning of every month for the previous month. So we already got the comps number. That was strong for August. Membership fees were up 12%, a bit above estimates there. Notably, every single segment had double-digit percent growth year over year. So there wasn't as much in this report about the effects of inflation or even supply chain problems as there were in Nike. But it was all in all a good report. But I think the market doesn't know what to think of it.
There's so many things to buy at Costco, though. Like, you got to think, Nike, and think about it. They're mainly selling shoes. Like, how much their money just comes from shoes. Costco's selling everything. There isn't one sector that's going to be like, oh yeah, we get 40% of our revenue from this. So it's a different issue. They're just selling a lot of different stuff. So, it's not, and I don't know, like, I didn't read the Nike report to say specifically what it was in the supply chain, but when you have, one main product, which, I've got to think that's shoes. I don't, I know they sell a lot of their stuff too, but I got to think the main product is shoes. It's a completely different animal than a company that sells a million different products. So,
I've seen some
obviously you
empty
might have
shelves at
individual
Costco,
supply chain issues on some products. They just put other stuff on the shelves at Costco.
I'm going to give y'all a long-term number here, and it's going to be good for today and also just, like I said, longer term. What's going on at 456? I mean, you did have the spike above that on the print. Your last 3 sessions highs have surrounded that area. And now someone's there right now trying to sell. And it's basically an area of a triple top, kind of in the middle of the trading range here. So this gets above 456, hold, go test the top of the trading range. Just feels like someone has a lot of stock there to go at 456. And then not too worried about the downside here. Monday's low nicely coincided. Monday's low at 46.62. That coincided with 3 other lows right at the 46.75 area. So decision time for Costco. Can we bust out 456? And we're quite a ways away from that low, but that's where I get concerned for more downside in Costco. I mentioned to Spencer. I mean, that's the only place where you go, you shell out $400 or $500.
And you
You
get your
do.
$2 hot dog at the end of it, and you leave with a smile.
The hot dogs are smaller now.
Everything,
And-
Joel. This is the hidden inflation.
And you know what else they got? They got
This
rid
is what
of
the Fed doesn't track too, with product sizing. It's
true.
totally the way they've been inflating prices for a decade. Is, oh yeah, it's the same thing. Joel,
Nope.
you're exactly right. Everything has gotten smaller. We've talked about this on the show too. You see those Reese's peanut butter cups? Look, I bring it back to like candy or whatever. But do you see them?
Dennis, you're talking
They're
to
one-biters now.
you're talking to the wrong crowd with the Reese's.
Yeah, we're both allergic.
Okay.
But
Well,
also-
anyway, so you guys don't see it, but the chat sees it. I mean, there's so many things that have gotten significantly smaller, yet they don't say, oh, so if you can't bring up the price 10%, then you decrease the product size
What?
10%. That's 10% inflation.
Yeah,
That's not tracked.
I mean, Jams
That's not tracked.
has got it. That's shrinkflation in a nutshell, right there.
And it's true. I mean, there's a lot of conspiracy theories. This isn't even a conspiracy theory. This is a fact. The crap today, Joel, you agree, the hot dogs, everything gets smaller. Everything
Smaller,
has gotten
and
smaller.
they got rid of the onion grinder, on the side.
Oh, they
That's
did?
probably because of COVID. You used to be able to grind the onions, but
Yeah.
you know what? This is not that I buy it that often, but and it's kosher bacon. They used to have those bacon packs. We got it last time, it's horrible. I'm never buying. I don't know where they're getting their quality from, but I'm done with it. No oven grinder. I don't know.
Okay.
And also some other things you could just see. You open it up, you're like, wow, I can't believe how small that is. So yeah, that's another
Right.
thing.
I was also reading this morning about there's I guess a shortage of liquor and wine and spirits out there. I read that this morning in all seriousness, and our next guest can actually speak to that a little bit because he's, in addition to being the founder of AllStarCharts and a master chartist and technician, he is also he also owns a winery. And JC Parets is going to join us now on pre-market prep. JC, good morning. How are we doing,
fellas?
What's up, JC?
How's the harvest going? The wine harvest.
So far, we haven't screwed it up too bad.
Okay, we actually got a picture, everyone, of JC mid harvest here last week or the other week.
Oh, there it is. There we go.
There it is. Yep, stepping on the grapes.
All right, we got jokes. No, we haven't pressed it yet. It's been sitting with the yeast. As of yesterday, the bricks were at 16. We picked it at 26, and we'll probably press it when it gets down to about 1, right? So the yeast converts the sugar into alcohol.
This guy knows everything. He's got this all figured out too. Makes his own wine. Mike looks like he's a Mike Tyson Punch-Out champion too. I love that picture behind you, man.
Like that? I get a lot
Mike
of compliments
Tyson,
from it.
that is awesome.
Joke, like I was doing like this financial advisor thing. You know how financial advisors love being like, oh, everybody has a plan so you get punched in the mouth. So that was kind of like making fun of them. And then everybody loved this. I just left it
It's
up there.
awesome.
Nice.
That's one of the best video games ever made. They don't make them like that anymore, man. That game was awesome.
No one makes video games anymore.
Well, yeah, we got
Look
some
at
coaching
Activision
issues,
and
but-
Okay,
Take-Two.
Hey, JC, I would love to get your thoughts on just general broad market, where you think we're at right now. Where are you on the bullish to bearish scale?
Well, I mean, really since March, we've been in the camp that we're in the midst of a major consolidation, right? A digestion of gains, just classic year 2 of a cycle behavior. So market peaked in the second week of February. It's just been breath deterioration ever since. Some stocks have been working, most stocks have not. And the question was then and still is, how long is it going to take? Even then, and since now that we have more data, it's really just confirmed that thesis. It was always, this is just a consolidation within an ongoing uptrend, like all of those other year 2s of cycles that will ultimately resolve higher and risk will be put on again, if you will. And now that we have 6 more months of data or 7 more months of data, we still feel that way. We feel more like that than ever before. So the question is, how long is it going to take? And listen, there are stocks making new highs. We're going to talk about some of the stocks we're buying here today, but that doesn't change the fact that only some stocks are working and most stocks still are not. So we're looking for breadth expansion. We're looking for an expansion in new highs, not the continued deterioration of new highs. We're looking for an expansion of sectors and industry groups breaking out to new highs, not the deterioration that we've seen. If anything, we've seen an expansion of breadth internationally, which I think bodes really well. The fact that the breadth data is better internationally than in the US, I think that's impressive.
I mean, Europe's been impressive. Like we look at China, it hasn't been impressive, but Japan's been very impressive. And obviously,
and Europe, yep.
Yeah. So you are seeing money still flow into international funds. It's just, maybe the money's coming out of China and moving into those international funds. Maybe it doesn't want to come. But obviously China's had its own problems. But I mean, so you talked about specific sectors. Where are you looking? Like what do you see that you like out there?
Yeah, I'd stay away from the new lows list. When you see new lows,
Smart.
It's true though. That's JC, man. And you know what? That's the best tip right there. Stay away. Just write it on your wall, right beside the Mike Tyson's Punch-Out picture. Stay away from the new lows list. It's a good tip.
The new lows list is not where you should start your analysis when you're looking for longs, right?
It's true.
And
everybody does that.
Listen, you don't see a lot of new lows and uptrends. That's what I've seen in my day. You tend to see new highs, right? So that's where we like to look. That's where we like to go fishing, right? So software, right? I mean, it's hard to argue against software. The relative strength there is off the charts. So names like Palantir, names like Unity Software, ticker symbol
Monster.
U.
JC, do you like in software, for example, do you like names that within a strong sector that have underperformed? Palantir has been a little bit of an underperformer compared to some other software names. Do you like names like that are maybe lagged their peers?
Well, Palantir, as we speak, is making new 7-month highs.
Okay,
so
I was going.
And you look at the amount of stocks that are making 7-month highs. I haven't done that so far today, or I didn't do it all week, actually. My argument is you're probably not going to find a lot of names that are making new 7-month highs. So by definition, that is relative strength for sure. Not to mention that the risk versus reward is so well defined because we're coming out of that base. So if Palantir is not above $28, you can't own it, right? It's people who are choosing not to buy it for reasons that have nothing to do with profiting in the market. They think it's a scam, or they don't like the CEO, or his political beliefs, or whatever it is. That's awesome. That's great. The more people hate a stock for reasons that have nothing to do with the behavior of the stock, the more bullish it is. Tesla 2.0.
JC, I want to ask you about this chart that you tweeted the other day. If you're eyeing high beta right now, or the high beta low vol pair trade.
Yeah.
Can you explain this to us here?
Well, I mean, it was a high beta chase, right, the entire time, right? Off the lows in 2020, it was a beta chase all the way. And in February, high beta stopped outperforming low volatility stocks, just like so many other things peaked, right? So the new highs list peaked in the second week of February. Biotechnology peaked in February. Emerging markets, the IPO index, the NASDAQ advanced decline line. I mean, I could go on and on and on. So many things peaked in February. That was the best things were. If you recall, that's when everybody had a SPAC. You know, everybody's making money, crypto ripping, the whole thing. That was the best things were. And since then, it's been deterioration. You can obviously see it in the high beta versus low volatility ratio. And then below, we're looking at the value line index, which is going to give us the median stock price, right? So this is not an index that's driven by 5 mega caps, you know, like the S&P 500 or the NASDAQ. This really gives you a better idea of what the market is actually doing, which has been a big nothing burger for most of the year. So if that high beta is real, because we're making new multi-month highs relative to low volatility, my suspicion is the median or average stock will also start to do well. Remember, the average stock in the NASDAQ is down 27% right now. The median stock in the NASDAQ is down over 20%. So most stocks are in bear markets, have been in bear markets. The majority of names have been struggling for most of the year. I think this high beta, low vol ratio can give us a heads up that perhaps that period is now over.
Right.
That's a crazy stat to think about, though, where you've got the majority of stocks down 20-25%. You have the SPY sitting 2.5% off the highs, and everybody's sitting here waiting for a correction. What you're saying is the correction's happened in a lot of stocks. Or not even a correction. You're in a bear market in a lot of stocks.
It's been a correction for 7 months. If you're waiting for a correction, where you been, bro?
well, tell CNBC, because they tell me every day they bring on a money manager saying we got a 5% correction coming, we got a 10% correction coming. Every other analyst that comes on there is saying that.
I'd rather ram my head against the wall and watch basic cable television during the day.
All right, JC.
So during the day, I don't understand. You have nothing better to do? Watch fucking basic television during the day? Come on.
People at the airport.
Gotta be faster on that beep.
People at the airport, people at the doctor's office.
Two terrible places.
All right, JC, maybe give us a couple names on your. You gave us Palantir. You gave us software. Do you have anything else that you like here?
Etsy, baby. Etsy. How about
Etsy?
that? Look at that. 210. That's the level. If we're above 210 in Etsy, I like this baby long. I think it's got 50% of upside. Take a look at Yeti. Believe it or not.
Yeti.
Yeti.
Oh, yeah.
6 is my level. This is more consumer discretionary, showing a ton of relative strength. This has nothing to do with fundamentals, because the less I know about a company, the better it is, as far as I'm concerned. But I do know about this one because I have a Yeti, and it is freaking awesome. And I feel like everybody I know who has a Yeti also loves it. And man, they're expensive as hell. So they're doing something right. Stock looks great. It hasn't broken out just yet. So to be clear, we are looking at $106. If it's below 106, you leave it alone, stay patient. But we want to buy a breakout above 106. I think it's got 50% of upside. Nice trade. And I love the relative strength.
This has been a quiet one. I haven't looked at this one for a hot minute, but yeah, very nice. And Etsy was one that it got so, you mentioned going back to February, right? And then it got punished so hard. But to your point, JC, it's come most of the way back.
No supply chain issues in Etsy. People make the stuff
in their basement.
Right? Yeah, their basement.
I guess.
Yeah. JC, where are you on this whole inflation? You know, and the Fed doing a good job, Fed doing a bad job. We have inflation, supply side issues. I mean,
I can't wait for the answer.
Yep.
The day I start commenting on monetary policy, just put me out of my misery.
Yeah.
JC's lost it. It's over.
All right.
Take me out. You know, take me out and stick a fork in JC. It's all over. I have no idea what the Fed is doing, why they're doing it, why everybody's so concerned about it. That's not my problem. We're focused on price. As far as inflation goes, again, those are economic implications that are incredibly lagging, right? So if you're looking at inflationary data instead of price, like it's the other way around, right? The price moves first, and then you see the inflation or the deflation or the disinflation or the stagflation, right? There's always some kind of inflation and some sort of debate as to which of inflations it is. And I just don't understand it because deflations are the implications of price movements. So why don't you just look at price and not worry about deflations? That's how I look at
JC's
it.
got it. There's just too many inflations. That's really the problem here.
The world's
Inflation's
got
for
too much
days.
inflation.
Everybody's got inflation, right? Like freaking Oprah. You got inflation. You got inflation. You got inflation.
I
Right?
missed that episode.
So,
Joel, you gave him the
look at
softball
rates.
up the middle on that one.
I
Look
did.
at rate. Look at commodity CRB index closing at new. Check my math, like 7-year highs, 8-year highs at 220 or something like that on the CRB index. Take a look at the U.S. 10-year yield. The bond market is smart. I don't know if you heard, but if the U.S. 10-year yield is above 1.4%, the cyclicals I think are back. The banks are back. Energy is going to break out. You know, those things sound somewhat inflationary to me. And then just to get, come back full circle, if you're one of these idiots that think gold is an inflation hedge, the market keeps proving that thesis incredibly wrong. Gold is just a hedge against making money, it seems like to me.
There's so much truth there. The gold has been in the gutter here forever. I mean, yeah, we had a little breakout in 2020 from 140 to 160, but this GLD has gone nowhere for a decade.
Imagine you could have bought anything except precious metals and made money.
Anything.
Every idiot is making money except for the gold bugs.
Yeah, more or less. I just had to. Oh yeah, JC. The last thing before we let you go here, I would just want to. I would love to know where your head was at last Friday, last Thursday, last Friday, Monday. We get a broad-based correction we hadn't gotten for a while. I know you were talking about the individual stocks being in corrections, but the overall market hadn't really done that for a while. I just want to know what was going through your head on Friday, Monday. Were you in full just like dip buying mode or
Grape picking mode?
Yeah.
No, actually, no. I mean, we had really been hands off, individual names, things like that, but really, really neutral because a lot of important indexes and sectors like financials are below overhead supply, industrials, materials, even technology below overhead supply. So there's really no transports getting killed. So there's really no reason to be aggressively bullish, particularly the broader markets.
Okay.
However, since then, I have been very impressed with the behavior this week, particularly from the cyclicals, particularly from interest rates and the bond market, and the lack of defensive rotation also, right? You're just not seeing that bid in bonds or yen or precious metals. You're just not getting that defensive rotation. In fact, the strength that we've seen in financials, in interest rates, in high beta, that's super impressive. So I have gone from, neutral, be careful. The world might not be coming to an end, but it doesn't really make a lot of sense to be aggressively bullish equities to, look at interest rates. Looks like oil's going to break out above 76 soon. All of these are very risk on that point to, a ripper into the end of the year. And then from a seasonality perspective, we're coming to the end of that seasonally bearish period that started 6 months ago or so, and we're almost done. So not that I'm like Mr. Seasonality or anything like that, but if the market's going to finally get going from a broad perspective, just mathematically, this would be a perfectly logical time for them to get their mojo going, again, right?
That's what the seasonality says anyway for the end of the year. JC Parets is the founder of AllStarCharts, guys. AllStarCharts.com, at AllStarCharts on Twitter as well. Great follow there, JC. Pleasure to have you on as always. I hope the harvest keeps going well for you.
Thank you. Sorry about the confusion last time. It got all hot as hell in Napa, so harvest was like 3 weeks before it was supposed to. So we pieced out. We went to Napa.
What kind of wine?
Farm life, bro.
What kind of wine?
We're doing single vineyard Cabernet Sauvignon in Calistoga. Primo juice. This is arguably some of the best Cabernet on planet Earth.
Okay. We'll have to check it out for ourselves. Thanks a lot, JC.
You got it, guys.
All right.
I'll see you soon.
All right.
Thanks, JC.
You want to know about charts, or you want to know about wine, you go to JC right there.
That's it, man. That's it. It's 8:50, guys. It's 8:50 on a Friday. Let's do some take your time. let's drop those tickers. There was a couple things we didn't get to. We didn't get to Meredith, MDP. There was a report in the journal that they may be getting taken over by IAC. There was no price given, but IAC did say it would value MDP at more than $2.5 billion.
So what do? They take it to a $2.5 billion valuation immediately on the rumor.
Yeah.
I mean, this is this market in a nutshell. It's like, oh, let's take it up 25% because that's a 25% premium. So better hope it goes through now if you're buying it at 56.10, because I don't even know how much premium's left in it. So I have no position in this. Would I be buying at 56.15 now a bid? Absolutely not, because I think the premium's all in there. I think if it gets taken over, it goes out at 58 or 60 maybe. If it doesn't, it goes right back to 44. So it's a major, the risk setup here is now to the short side, unless there's another bidder that comes in or it's significantly above the 25% premium that the Wall Street Journal projected, because I just did the quick math, $2 billion market cap close, and you're saying $2.5 billion. Well, that's 25% premium. It's up 25%. So they put it right on there right away. This is this market. It buys first, asks questions later. I would not be buying this up 25% on a rumor.
Well, at least the company says that they're talking about it, so that's
it's Wall Street Journal. It's legit. It's just well, we're going to buy it for a 25% premium. Why are they buying it right away at the 25% premium? So it sounds absolutely overdone to me, buying and for the entire thing, saying this deal is imminent. It doesn't sound imminent to me. It sounds like they're talking. So I don't know. Maybe it's going to be a 35% premium. Maybe the risk arbs are speculating a lot higher. But
anybody else come in?
Well, it said in the article that there could be the potential for another buy or two. I did read it.
I don't know who that would be though. It's maybe some private equity.
It's not like this isn't like this on fire industry here too, Joel. That I don't know. I think if you're long this stock, congratulations, great buy. Ring the register and sell it. That's my opinion. I wouldn't stick around for the last couple bucks. Because if they all of a sudden pull the rug out from under this rumor, it could be back under 50 in a heartbeat. We've seen this happen time and time again in this buy first, ask questions later market, where you get something ramped right up on a rumor, and then the rumor doesn't materialize and the stock collapses. So I think upside's $2 or $3. I think downside is $10.
Not a good risk reward ratio.
Not at this point in time. It was a 44.
Yeah. All right. Tickers from the chat. Thank you to whoever reminded me about CCL. I'm terrible.
Yeah, they always sneak it in.
They always sneak, and it's always at like 9:15 Eastern time. It's always right before the open. So CCL is on the schedule to report earnings tonight. This morning. They're on the schedule to report this morning. Probably in like 20 minutes or so. So let's pull up that CCL chart if we can.
I mean, it had all kinds of resistance from 24 to 24 and a quarter, let's call it. And it cleared that. So I still like it, holding 24, move to the upside. I mean, there's just spotty daily highs here, 25, 29, and then another high at 26, 28. I mean, I don't know how good of a quarter they can have, but
how many ships are still not?
I don't know. I don't know.
I don't know either. I don't know the answer to those questions. But I mean, it's beat up. This industry has been beat up. Eventually, if we do get past COVID, it's going to be an industry that's on fire. Me and Raz were saying that a year ago, that eventually, the cruise lines could be an industry that catches fire. I will say I would rather own a cruise line than an airline, because there isn't a lot of business travel happening on cruise lines.
That's what I said. That was my
that's
argument.
a good point.
Yeah.
So if you're gonna go one or the other, I think I think cruise lines could eventually get back to where they were. I don't think airlines are ever getting back to where they were, because they lost so much business travel. There's not a lot of business travelers on cruise lines. So I'd rather own the cruise lines than the airlines. At this point in time, with not knowing Delta, I don't know if I want to own any of them.
All right, let's keep going, I guess. We'll do some more tickers in the chat here. Drop them in. We got 5 minutes left. Let's look at, someone's been asking about AstraZeneca for a few days now. I keep seeing AZN. That's like the second or third day in a row I've seen AZN in the chat.
For some reason, this stock, so you have a lot of healthcare stocks that have simply fallen off a cliff. And if you look, and obviously, you can go maybe away from the European ones. Maybe it's just a European thing, because the European stock's been hot. Merck has come down significantly. Lilly has come down significantly. Pfizer has come down significantly from the highs. Even it going over to GlaxoSmithKline, it's come off significantly. And then AstraZeneca just doing its own thing, making new highs all the time. JC would love the relative strength on the thing. I just look, I'm a pure trader, and I'm like, well, it scares me though. This has definitely been best of breed because it's one of the only major pharmaceutical companies that continues to break out. So it's good, it's breakouts, but this isn't the environment that breakouts have been working either. So I don't know if I'm paying up. I am a contrarian. People saying I'm a natural contrarian. I am. I always have been, but I like, with JC, I like to buy stocks that are in uptrends, but I like to buy the dip in the uptrend. So, so I'm a contrarian within an overall trending environment. I can say AstraZeneca is definitely trending higher. That's going for it. But what scares me is a lot of the other stocks in the sector haven't been performing well.
Have a little AstraZeneca, I think, from the mid 50s. I cannot remember the exact price. Really at an important area. This was the pop up to 64.94. That was on some COVID drug news. It didn't really pan out. But it's just been keep an eye on 61 here. This monthly high is 60.93. This is 1, 2, 3, 4 months of trading action here. So a breakout over 61, yeah, it's good, but definitely coming into a major area of resistance.
I've got one that Mitch was talking about earlier, about an hour or so ago. Sony is $3 away from another 20-year high, or 21-year high. Excuse me, 21-year high. SONY. They changed the ticker on you, Joe.
Yeah. Okay.
This was so. Go back to that 20-year chart. I did not realize that Sony had not made a new all-time high.
No, it did in February.
That's impressive.
So I'm saying it's $3 away from that.
So go back to the long-term chart, Joel. I don't know how far you can go back, but
I mean the monthly down here. How much farther do you want to go back?
Well, he's saying that it was back in the financial
in the .com. Yeah, it was .com.
Go back to the 2000s. See how high Sony was. Just again showing you.
See, my 20-year gets caught on.
I got it.
Yeah.
I got it.
You got it almost.
I got it.
Keep going.
It's still, yeah. They don't have the where it was in 2000.
Here, okay. I got it. I got it. 1 second. I got it.
Spencer's got it.
Bring it up.
So many stocks he bought in the year 2000.
Boom. There we go.
Holy.
Look at that.
That was a boom. I mean, we keep saying, and look at what it did. It went from like $20 to like $160 in a couple of years, and it's never got back to those highs. Is that not incredible? You think you look and you're new to the markets, and wow, this Sony stock is just, I wish I would have just owned this when I was a little kid. Well, you know what? No, you don't, because if you would have bought 1999, 2000, it'd still be down significant amounts of money. $160 back in the year 2000. It's $116 today. That's what happens when you pay multiples through the roof and sit on them. You can trade anything, but when you get stuck in these high flyers and paying 80 times earnings or 30 times sales or 20 times sales, eventually the growth starts to slow, and that's what happens. So this is why I'm a value guy, not a growth guy.
Shout out to Mitch for bringing this up this morning. I mean, we're right there. We're $3 away, right, from that February high, and so. Yeah,
still significantly off the high from 20 years ago.
There's no overhead supply. Nobody actually has owned this stock.
Nobody even knows. Nobody remembers that way.
Nobody owns this stock for 21 years. I think.
I bet you. No, people don't sell at losses. Spencer.
I'm joking. There are some pension funds, of course, that own it, but
no pension funds. There's retail traders that would have been around back then, and heaven forbid you sell at a loss because nobody wants to ever cut their losers. Right. They don't sell at losses, and you know what? Eventually, maybe they'll get their money back, but it might take 50 years, better part of their lifetime, to get their money back. I mean, same thing with Japanese stocks. We talked about the Nikkei, topping out. Yeah. We're not back to where we were in 1992. So we're 30 years later, still trying to get back to those highs. Could that happen in the U.S. markets? It absolutely could. Is it going to happen imminently? No. I don't think so. I don't see any signs of like this imminent crash. And I think JC's right. And I think you're right, Spencer. I do think eventually we're making new highs again.
All right, guys. I got to hop. I'm going to let you guys take it the rest of the way. No pre-market prep plus today. Spencer, I'll be talking to you at 3:30.
Okay. PSA, if you're looking for upcoming events, maybe I should have mentioned this a few days ago, but Netflix has an event tomorrow. Their To Dumb event is what it's called. They're gonna basically, it's the first time they're doing this. They're just gonna preview all the stuff, all the movies, all the TV shows that are coming to Netflix, I guess, in the next few
Fun.
months or
When
years.
is this?
It's tomorrow. So,
Oh.
yeah,
Could there be a run up today into that event?
maybe I should have mentioned that a few days ago. Sorry.
Let's see what the stock has done. We'll quickly just stick with you for a second here.
Okay.
Oh man,
Okay.
Netflix is right near it. You know what? This stock, you want to talk about stocks making new highs and moving up higher. Netflix content's killing it. Subscribers or whatever, it doesn't even matter at this point in time. They got an event coming. Why not? Why not make new all-time highs on Netflix? I don't see any reason. The valuation's extreme, but I don't see any reason why this stock is all of a sudden going to turn around and not. I think this is, if you're thinking the market's making new highs, Netflix is going to be one of the drivers. It's been a leader. I think it continues to remain a leader.
Tiger King 2, Vista Wander's putting out. Don't say I didn't warn you, okay? Tiger King 2 is coming out for real. Okay, that'll be a wrap here. Guys, smash that like button, please. How many likes we're at today? We're at we're at 253. Let's get to 400. Dennis, have a great rest of your day. Have a great weekend. We'll talk to you on Monday. Guys, I'm going to wrap it up here. We're going to do some live trading at the open, into the open. Ryan Faluna, Mitch Hotch, Zunaid. I'll stop by for a smidgen. And then I got to prepare for the show afterwards. So going to end this stream and it'll redirect automatically to that. It'll start probably in another minute or so. So hit that like button. Please remember all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. Thanks to JC Parets. Thanks to all of you in the chat. The lovers, the haters, everyone. We love all the feedback. We do. So thank you very much. I'm going to end the stream here. Live trading with Benzinga starting live in a minute.